This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Might be a little quiet of a session this morning ahead of the new Fed chair, Kevin Warsh, basically having showtime, right? Fed Day. And we'll talk about it just briefly to say, I don't think he's going to hike. So this is a situation where I think we have a very, very, very dramatic dispersion unwind that has occurred. And we've had a big dispersion unwind, warned June 2nd, and it just so happens that this is the largest dispersion unwind ever. Even bigger than 2000, even bigger than 2009, obviously bigger than 2020. So lucky or good, that's what we got. And I'm looking for a little bit of digestion into Friday, but the risk is still very, very clear if there is going to be a little bit more tightening involved. So I would say first and foremost, we're going to watch the dollar. I think you know that that's my big bugaboo right now, which is exactly what I wrote on Fed Day of June 17th, watch the dollar. And this has only moved higher. So that's my number one warning to equity and bond bulls. Rising dollar is a liquidity vacuum and policies dictate price. I've also mentioned watch Fed liquidity. That's really a focus of mine. This is a Fed liquidity tool down here. We haven't quite rolled over yet, but that is absolutely what I'm going to be looking for because Fed Warsh has basically been on a path of talking about a smaller Fed balance sheet. However, he also talks about the productivity gains from AI. So AI is going to make everything cost less. Now, we don't have that yet. It's a little bit too early for that productivity bump that would basically offset the liquidity sucking sound of a Fed balance sheet that's undergoing tightening. But it's very hard for me to believe that he's going to hike today. We could have a normative one. It's debatable, though. Best argument right now, wars are inflationary, and the fact that we had a hot print for last month, but we have PCE tomorrow morning, and it is expected to fall, both index and prices. In fact, it's expected to fall from 4.1% year over year to 3.7%. Why would he hike ahead of that pullback, drawdown, whatever you want to call it? Anyway, I think it would be very important to watch the dollar as we move into this decision. And then specifically, why would he hike? Why would he get consensus to even hike when it undermines the Treasury's job of financing this government largesse? So could he? Sure. There's a hubris here that he's got to do it. In other words, this credibility hubris. But I think it is a case of the medicine might be worse than the disease. And we already have fiscal dominance. Jeffrey has written about that for 2 years. Yields are going to stay bid anyway. He doesn't have to hike. And then basically we just still have a big old government that is full of fiscal spending and grift. And there's just no easy way to offset that. And hikes are just going to be very, very, very expensive across the board. So I don't think he's going to do it personally. Anyway, we'll see what happens. That is my baseline bet. We will have still rising dollar. That's the headwind to equities. And yields right now are having a little bounce, a little nervousness, but also following oil. Iran is, striking Jordan, U.S. bases there, etc. And why wouldn't they? They gave Trump an out and Trump blew it. So there's no more negotiation. This is going to be a protracted Middle East war, and that's all there is to say about it. So oil goes higher, yields go higher. Warsh does not need to hike. So we got some volatility I still think that needs to be anticipated or protected. I gave that long write-up last week and gave you some considerations. I also have some levels where we could get into a little bit of a bounce toward after this FOMC decision, and the volatility kind of has worked its way out of this week's expected move. But bigger picture, I still see more ahead. I still see volatility still ahead. In the short term, nobody knows. Citadel was out saying the Fed would do a surprise 25 basis point rate cut, but just remember they're also talking their book and they're market makers. They shouldn't be in the analyst business, but whatever. Basically, VIX is biding its time, but I am suspect. Let's just say I'm getting more and more suspect about the market. After I can see a case where after today, we can have a little bit of stabilization, but ultimately I still think VIX is coming into a theater near us but we got to get through July first. Let's just get through July, huh? SPX, we need to basically get and stay below the 10-week to even have a chance at that 72.72. You can see on the daily, SPX is also kind of inside this trend line. We got some gaps on the upside, and we also have a very large gap on the downside. So I'm still of the opinion you protect a 72.72 just because we don't have an edge with Warsh. We don't have an edge with Apple and Amazon. We have VIX seasonality. We have negative gamma, which can trigger convexity, which means buying begets buying. Well, that's not we have the opposite going on right now. We got the opposite right now. We can have a case of where selling begets selling, and then a faster rate of change move in the dollar and yields and oil. So right now, protection down to 72.72 makes a lot of sense. And the Q's basically protection into that 637, 644 neck of the woods. It's hard to tell exactly because we got several levels of support coming in. We got the 30-week, which is, let's call it 666 for QQQ. And we've already hit a low of 667.88. So we're kind of sort of on support, but not really. And then we've got 637, which is the prior January 2026 high and October 2025 high. And then basically this 637, it better hold. So this is your channel, why I keep saying I can still see it. We break below and we can have a mini VIX event. A bigger VIX event, of course, we're going to need to get and stay above about 22. So energy higher, NASDAQ is still suffering. People keep saying it's oversold, it's oversold. Well, guess what? That's how it works. It can become very much more oversold. We have had a parabola in the semis that has broken, and it's been a phenomenal short. So I still have SOXX 463.87. Just put to 30-week EMA, and you're basically in that neck of the woods of where this stuff comes down and has to hold. Otherwise, it's coming down a lot more. All right, so short term, I'm looking for a bounce. In other words, we get into these, let's say Friday, we get into a lower level on Friday. I'm looking for some stabilization. And you know I have not seen any. I have been here every single day. I still don't see the buying. I still don't see the thesis for why we would have any buying. So the earliest, repeat, the earliest that I can see for a potential bounce is Friday. Finish this week, get through the volatility of Warsh, the unknown, figure out if he's going to hike or not, tighten liquidity, figure out if he's going to talk about balance sheet reduction of liquidity, which is, I think, his main goal. He's still going to want AI productivity, and AI is a deflationary force, but all that takes time. All that takes time. He can impact policy on Fed balance sheet now. Until then, let it fall. I got 664 was the next one that I had given you, right? Yeah, right here. Let's see. We hit 664-ish. We're at 667 and change. It's not that far. That was my overshoot. I gave 3 levels. And it doesn't mean we're not going to take it out. We still have a much bigger magnet at 637. VIX above 1929, it might not stick that landing, but this has been waiting for a while. Remember, I said I'm not going to write about VIX until I'm ready to write about VIX, and I wrote about VIX last week. So in lieu of sector rotation, there will be volatility. We've already had some really nice selling in semis. And Micron filled the gap during regular trading hours. There we go. Perfect. So now we have to stabilize there. We have to get to Friday. I still think we're going to have to wait this week if we're going to have any bounce. Remember yesterday I was not at all. I didn't care that we were having a bounce on whatever news came in when I closed the room. I said, nope, we're not there yet. This, whatever it was, when I closed the room, it did this. I said, nope, still bearish. Now, Friday, this is important. If we get some stabilization on Friday, cool. It doesn't mean I would not change anything of what I wrote so far, which is protect to 72.72 SPX and protect to that 664.51, which we're already there almost like $1 away. And we can still overshoot. But there's usually some digestion. And what I'm looking for is getting out of Apple and Amazon earnings, obviously, and seeing what happens with this very protracted growth scare ratio, which is absolutely extended and is just waiting for a snap back. Could be Semis are still soft, but software sells off more, or the reverse. We get a little flow and a bounce, but we're not there yet. I think we have to wait until Friday.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.